All right, everybody, give it a second here. Let's try this again. Not sure what happened. Come on back in. Give it a second here. Just totally the whole thing went out on me. Thanks. Give it a second. Let everybody get back in here. Don't know what happened. It just cut out. I've been having problems with this most of the morning. That's why I'm late today. But I do need to get these updates for everyone. And tomorrow we'll be back full time. Thank you, everybody. All right, let's just keep piling on back. I just burned about 180 people that were patiently here. So I'll slowly get back into it, but let's give everybody a few moments to get back in. And while I'm doing that, of course, everyone knows you can reach me on Harmonic Trader. Let me delete that one. Delete that tweet. And we have a new one. Thank you. Appreciate it. Yeah, I personally thought it was YouTube on the attack. Maybe YouTube didn't like some of my recent comments or abuse of alcohol online. Don't know. Sorry about that. Give it a second. Let everyone pile back in. I just retweeted that, but I'm going to start over. Start over with Bitcoin. Appreciate it. Another shout out. I deleted that first recording, so you didn't miss anything. But again, shout out. Thanks, Don, Vlad, Nice Hash, Double R, Tails, Susanator, Jordan. What's up, Jordan? Ziggy, what's up? Brightful, colorful father. It happens. But let's try to make it happen less. So let's, as we were starting, okay, we were trying to leave this, do a follow-up from Saturday, because Saturday was amazing. It was amazing. And I don't, again, I still say we are, you could call it 2/3 of the way through. 2/3 of the way through this decline, quite frankly. Again, I want to start off with the real easy stuff. The real easy way to be thinking about this, so that if you want to do manually, learn this manually, which I recommend everyone should understand the alignments. Everyone should be able to recognize, you know, a bat versus a Gartley, and why is that so important. In fact, today we're going to talk about why that's so important as a part of understanding where Bitcoin's going, Ethereum's going. So welcome back, everybody. Welcome back. Sorry about that. If I ever have a glitch, give me a couple minutes and then I'll get back on. It's happened before. It'll happen again. Anyway, here's the thing about, let's just start with Bitcoin, where we are. How far have we come? Is it an opportunity? I know a lot of people are saying this is oversold, just really basically hoping it's oversold. I think we will know that on the weekly. We'll show it in a second, really close. What I was getting to before we got cut off was simply the fact that we satisfied all of the pattern ratio requirements that fit into what you would define as a Gartley. Okay, there's an M formation, and you have a B point that is, it's not within the strict tolerance that I require. So here's your B point on the Bitcoin. That's Coinbase feed weekly, which is, I think, probably that or Binance are probably your two favorites. They have the most data. That's what you want. But your B point at a 55.4 or 55.2%, okay, so X to A up here, got you a 55.4% retracement. If it was a Gartley, we would want to see a 618. That's just how that goes. And the tolerance that we use, which helps to differentiate similar looking structures, those that may possess alignments that are the same, okay, has to be plus minus a 3%. Plus minus. So if it's a Gartley, you're looking at your main number 61.8. On the top side, that can be a 58.8 or a 64. It can come down as low as, there you go, 58.8. It would really need to be like there for your minimum Gartley, or as low as like a 64.8. That B point's incredibly significant. I've said this before. That B point recognition was probably the thing that opened up the whole canvas of harmonic patterns, that once I realized that the B point was a marker, then we knew where we could anticipate D. A lot of people like to just say, okay, 618 or whatever point, and then 786. It doesn't work like that. And we're going to look at the geometry of why we need an 886 versus 786. But that would explain the bounce. That would explain why at 17.8 you saw a 3,000 point just recovery. It's not, relief, dead cat bounce after such a long drop. That, all right, at least you got something to hold this up. We entered the new week. We're in a new week, new day. And so we're going to probably come back and retest last week's range, I would think, at a minimum at 17.8. But I still want to see the geometry line up. So the geometry, the ratios, have to come in at an 886 off of the previous cycle low. And I'll talk about why we're doing cycle low versus, say, all-time. All-time is something I want to look at, but off of the 2002 cycle there, okay, you're looking at 11,543. Let's call it 11.6. 11.6, it's under 12. Amazingly, at the low here, you were basically less than $6,000 away from hitting that. Yep. So pretty close. I mean, that's something we've been entertaining for a long time. It just seemed like we got into the end of last week, this thing was on a massive slide and just nonstop. And this was Saturday's action. I mean, these were big candles. We've been looking for some big candles. I almost wish it would have happened this weekend. I really almost wish that would have just flushed out, and then we could start a stabilization process. But we didn't. And what has happened since is we have another big bat printing from the peak on the 17th all the way down, set you up where essentially 20,900, call it 21,000, is trying to cap this reflex rally. Go off of that, we just going off of that, we see that if we even take our time to do a 1-2, so let's say we come down for a type 1, which we're already in the midst of, 19,682. So we begin another stair-step process that even if we come back for a retest there and then down to confirm that larger bat, continuation bat, that's how you should get it going. Let's see, but again, I think it's, you go in the 4-hour time frame straight down. But we do have some interesting daily things to consider, and it's something that from a structural basis, I want to see that 11.5, 11.6 number get hit. And if we go off of just the daily, I think this is interesting enough to start to focus in on this zone. I mean, amazingly, I mentioned this last week, there's a deep crab pattern setting up here off of that October low down to that high. If you were to trace it out, it looks like this. You go from there. It's grabbing off of a slightly higher point. I'll get to that in a second, but it's still a deep crab, even if you were to draw it. And it gets us in the area where you need to be. There's C. So 1618 there. The current 1618 is drawing at about 23,300, 23,200. If we go off the October extreme, it's about 20,000, 21,000. But what do we know about the deep crab? It's deep, meaning usually goes past its zone, goes past the 1618. And that's why we utilize what we call the HOP, the harmonic optimal price level, to gauge how far can this stuff go past how far can the real world action go past the measured ideal model. That's the whole trick. That's the thing of really trying to get precise on possibilities. Okay, we can measure them. We connect dots. That does a great job. Connecting dots and understanding the patterns. Before I got cut off, what I was saying was connecting dots and understanding pattern alignments can tell you a whole lot about the structure, the type of structure, and what we can generally expect from particular patterns. A deep crab is going to go beyond its zone more so than, say, a Gartley or even a bat. These are all auto-generated, and the zones that are spitting out and the hop level that it's spitting out at 11,087 is not a coincidence. To me, what this daily pattern says is that we have a smaller pattern within the weekly structure that we want to pay attention to. But let's forget everything that's happened. Let's just treat this as a textbook setup with no concerns. We're getting served a beautiful gift of this simple deep crab on a daily pattern that we've been looking for a while. Tell me about, just ask yourself, what's happening into the zone? I think we can all describe that as severe extreme action that is just sliding right through our minimum measures without confirmation until yesterday. So yesterday, first bullish HSI candle, and this is what I mentioned, I think, early last week, but it was also the thing that I'm looking for across the board that needs to happen before we can even locate an opportunity within this larger zone. And it is a large zone. I mean, how does it help you if you have to assess a general zone of $13,000? That's not what we're after here. That's why we are locating that trade. We are assessing the action in the zone, as we do with every opportunity, to optimize drawdown, reduce risk, and then hopefully be jumping into an opportunity that is on the move, not necessarily just vacillating in between and just doing a simple pause. We want to look at this. Tell me about our amplified RSI. A lot of people are talking about standard RSI, but we have on Harmonic Pattern Collection, the blue line, this is amplified RSI. This is my proprietary RSI measure that is not only hypersensitive, a faster moving RSI, but shows us what we can expect and really highlights the type of formations at the extreme. And the type of formations, that is something that people really don't understand when I see RSI analysis. There are different categorizations. If it's a extreme, sharp V formation, like something like back here where you dip in and then dip right out within a day or two or a couple days, that has a totally different character than, say, what we call a complex formation, which is, this is a W formation. Look, it has again, the M and W framework, measurement, formations. That's where we start. This is a W. And all points of the bottom points of the W have to all be in the extreme, which they are. What does the complex mean? It's going to take more time. It eventually will be retested. These are all part of the RSI BAM strategies. We have a complex structure now. We've seen it coming down here. There's the first point, B point. We come over here, okay, but we have to get out of the zone. We're not out. We do have a W, verifiable W that came up, and actually we could even treat this little point here. Let me blow this up. Let's just blow up amplified RSI. Let's really get into this because it's critical. It's going to tell us how long this will take, and it will also tell us what kind of reaction might happen once we get out of the zone. But we don't do anything until it's out. It has to do something like this, okay? We need to go like this. Hey, I see James, if you don't have that chart, I'm on, make sure I'm on, you're saying you don't have the same chart. I'm on Coinbase Daily, my friend. Check that out. If you have a problem or discrepancy with your chart, and that goes for anybody, if you don't have that same, make sure that you are, send me an email, send me the chart if it doesn't match up with mine. This one should all be up to date. But we're all looking at the same thing. For the amplified RSI, it shouldn't be a problem here. Depending on your data feed, and it does depend on you know, what brokerage you're using. Most of them on Bitcoin on the daily did come out. And we're going to look at this on the weekly, because by far the weekly still needs a lot more time. But this W formation tells us, okay, you're close. But until we get out for amplified, we're going to expect some sideways action, sideways to down. The thing that HSI did, HSI came out of the zone yesterday for the first time and doing a rather aggressive move up to the 50 already, which is okay. You know, that's fine for now. We're going to monitor that. And the sequence of what we're looking for in every setup. I don't care if it's 5-minute or weekly. We want to see first pattern completion. Critical. And then, as I said before, our next step within the zone is assessing how much beyond the ideal measures the real world price action is going to go. And we do that primarily by lining up where confirmation comes in. We see confirmation finally yesterday. Now, here's the point that we are looking for on that confirmation assessment, which is harmonic strength index. That's HSI. That's what that arrow is. That's our primary HSI confirmation method to simplify it, where show me the terminal bar icon, show me an arrow, and now I'll start to assess. What we want to see is a check back of that bar. So if we get back down to 17.8, 17.9 in the next day or two, don't be surprised. It is critical that we have this kind of a check back, what I think would be maybe even something a little bit deeper before you get a reaction out of the zone. That's pretty close on the daily. Now, I want because we have been focusing on the weekly time frame for the bat formation that has occurred, not to mention the last two cycle lows had beautiful bat patterns automatically generated. A couple questions coming in. I'll take one or two of those. Alexander, how's the hop calculated on the deep crab? It's an automatic ratio. It's a technique we call layering that I talk about in my volume 3 book. And again, the harmonic optimal price is just an ancillary level where we allow the patterns to have a little bit of leeway. Not much. And we're also looking for a specific confirmation within that area. But pattern completion first, then confirmation. The deep crab is essentially same as a regular crab, but we see it go past the 1618. We utilize on the regular crab, we utilize a 1902. On the deep crab, we use a 2.0. But all of that, every pattern has a different hop level, and those are automatically included. For the current setup, what I'm thinking will happen here is we'll get a 886. We'll get a big, huge bat pattern that will generate once we get down to these lower levels. This is weekly. Now, the reason why I'm saying weekly, not only because the last 2 cycles had beautiful bat patterns that marked the low for each one, but now we need to line up our confirmation. And look, here's the weekly. This is something that is still troubling across the board. Now we're getting pelted here in Miami, little mini hurricane. I mentioned this last week. I think it's the most important aspect of all of crypto is we are deeply oversold with HSI not coming out. In the same regard, our amplified indicator, amplified RSI, deeply oversold. Now, these 2 indicators really help us because if we bring in standard RSI, which I think is a good comparison, a lot of people just looking at standard RSI, it looks like this. They're a little confused because RSI is at the lowest it's ever been for Bitcoin. They don't know how deep it will go. They don't know whether they should take it now. You know, do we consider it oversold now and then take the trade, or do we go deeper, or how do we handle that? I've seen a lot of confusion. The thing about this indicator expansion that's so critical is that the further you go into the extreme, it can be overbought or oversold, the more time it'll take. And here, I mentioned this last week. On the upside, a year ago, year and a half ago, when we really made the run on Bitcoin, okay, the RSI exploded into the extreme and did not pivot out until, what was that, 6 months later. That's a perfect example of indicator expansion leading to massive price movement. And that's on the downside now is something of a concern. RSI deeply oversold. How deep will that go? Doesn't matter, it's historic lows. Yes, it is a historic low. Okay, but will we get a W formation on this? Very likely. Let me blow up this chart. I can see it even better. You know, here is, let me remove arrows. Okay, I've expanded RSI. There's RSI. What we'll likely get with something that's this deep as well is we probably will get some kind of W formation down here and then come out. Now, tomorrow I will talk about the other half of what happens beyond this. If we get it, we do get a W formation here. What does that mean for longer term consequences? Because it does have meaning. But for today, what you need to understand, in the same way that it helped you on going up, where look, we have an M formation completely in the extreme that led to a corrective move down. It took time. Now, this is standard RSI. We see it better with the amplified. That's why the amplified indicator was developed. It's an homage to Wells Wilder, who is the creator of RSI. but it helps to see the extremes. That is absolutely essential. We have to see what type of indicator formation is happening in RSI to really judge, is it impulsive? Is it a complex formation? Because if it's complex, and that's what we're saying here, it will take more time. I mean, you think about it this way. You need 4 points for a W in the oversold. So if we're going to take 4 points and we're going to get 1 and then 2 and then 3 and then 4 to get out, think of that as basically 4 more weeks to form that complex structure. These are some of the assessments that will, in my opinion, keep you out of bad trades. They'll keep you out of early executions. Again, go back to the daily. If we know that the weekly still needs time, then the daily, okay, maybe that's trying to stabilize. Maybe that can come back because, again, we had HSI trigger finally yesterday, but we still need to retest that point. That is the penultimate, the second to last formation phenomenon that occurs before you really can kind of put the stake in and say, all right, is this insane downtrend over where we can get at least a reaction? It's not there yet. And what happens when these situations come together is you have to follow the trend. If this is going to take more time, you have to be patient. This is where trading discipline really comes in to serve you well, where you have to be patient here. Yes, that was a great little thrust move from 17 to 20, 21. Big deal. It's really not much. It's a nothing. What I want to see that check back. I want to see the confirmation get confirmed, get retested. Also, I want to get to the right of this line. At least this extreme downtrend is kind of like the ski slope right down into the zone. We need to be here minimum. Ideally, I'd like to be over here. I'd like to really be to the right of this massive downtrend before I see anything. The measurements, the wide range of the crab doesn't help us. I mean, it's not as effective as we've seen in other patterns, but I still have to consider it, and the fact that it is down there at 11,000 is to be considered. It's getting generated. It's a harmonic level. So a pause, a slide, some consolidation, you're still days and days away. I think I want to go to Ethereum from here because we'll look for the check back. Let me final point on Bitcoin before I move on. Basically 18,000. 18,000 is the check back point, retest point that we could see in the next 24 hours, 48 hours. And I got a couple questions on what I was saying about the solstice. And maybe I should just say the 21st is a better word. I don't need to throw any astrology on top and screw up the harmonics. Harmonics and astrology are two different things. Harmonics have nothing to do with astrology. But people look, cycle people will look at 90-day cycles, which is what an equinox cycle is, roughly. You want to see this. As I said before, mentioned on Saturday, if you go back to the 21st of every equinox, even go back to, go back to last year, you're going to see this over and over again where here's December 21. There we go. Oh, wait, that was a peak. Where's the 21st? There's 21st. So there's 21st. And that was one of the very few that were on as a sell signal. Go to September 21st last year. right there. We're seeing a lot of inflection points on the 21st. I know this one really became clear to me last year. I didn't even want to admit it, but I had to say it because, observation is really 80% of what we do here. We have to recognize what the market's doing in terms of cycles to look for the repeating behavior. So that was last June. We did have a pattern that completed 30 days prior and then finally stabilized and confirmed the low on the 21st and still took another 30 days. And this actually could be a good model to follow for what we might be about to enter. If we're going to get some kind of stabilization and then look at the corresponding behavior after the 21st, okay, that would establish at least a general support level somewhere in this area around 17, 18,000 of this pattern, of this daily situation. Weekly has not cleared out yet. And we could screw around for a while. I mean, think about it this way. I love the 30 bar count, meaning we look and use 30 bars, use that 30 number after the pattern completes to create a time window of where this thing should develop. It's like that. All right. So if that was the 14th, basically we completed that by mid-July. This consolidation should be over. But let's really blow up the zone because a lot can happen in this zone here. We still have to clear out trend lines. We still have to develop weekly confirmation. The daily, even though the daily has triggered, it still needs to check back. It still needs to come out on amplified RSI. What I think is going to happen here in the next 2 days is that has triggered. We go right on the close. Then we come back down here and we really see what can this do. Can it flush down and then come out something like maybe from there and give some kind of reactive rally still within the downtrend and then grind our way lower? Those are some ideas. Those are some considerations where nothing changes on the Bitcoin targets of 11.5. If anything, you would almost want to see 11.5. You want to see this hop level get hit at 11,087 and trigger it on the weekly. It's unfortunately that's 40% lower, almost 50% lower from where you are currently, but you have a pattern and your weekly numbers line up and all of that. Again, go back to historic precedent, cycles. Okay, harmonic cycles is really what we're talking about here. You have two possibilities. You have the extended pause, which is what happened in 2018. I like that scenario more so than what happened in 2019. But this would be the ideal scenario. Pattern completion, HSI confirmation, and then you have that final check back to stabilize the whole thing. That's a healthier way to go for price action and definitely break the trend line. Break the trend line. Break free of all of the technical chains that are really holding this down and let it be almost obvious. Let it give you really clear signals before going there. Otherwise, everything's a reaction. And I'm not trying to discourage people from trading. Just don't hodl. Be as aggressive on your management, aggressive in the profit taking. I'll show one or two here in a second of some altcoins that have bounced, but they're all reactions. And even if Bitcoin did some kind of sizable reaction after hitting all of the numbers, let's just just look at this in terms of the model of how we would approach this over the next 6 months or more. And I'm not saying this is going to happen. I'm not even I'm less enthusiastic about crypto as an asset class now than based on a lot of the fraud that's going on. It's very disappointing to see, and a lot of that has to get cleared up. But from a simple measurement standpoint, let's say we can get down into here and we can stabilize out and go sideways, start to turn up. It would be off of these low teens levels. Maybe 886 gets hit really fast, and then you start your way up. That's the other consideration, is that we saw how fast Ethereum dropped. Okay, Bitcoin, once it hits that 11 whatever number, 11.5, 11.8, okay, light switch is on. And that light switch can go on quickly or it can take a little bit of time, but that's why at 20,000, at 18,000, we want to be ready for that to be hit and then react. We've got confirmation off of this daily pattern, but I would still, in terms of a longer perspective, not, if it's a type 1, and believe me, this is not what I'm saying. I'm not saying it's going to target 1. There's just a lot of things that are at stake here, okay, that have to be assessed before I can even go there. But this is to illustrate a larger point, that you would need to do a reaction and then come all the way back down for a secondary test. You know, maybe not even that deep. I'm thinking this low teens area, low 11,000, 12,000 area, but it has to hit 11,000 first. We'd still need to do like a 6-month reaction, come back down, talk to me next year. You know, talk to me next year down here again before a new cycle, the approach of the halving cycle, whatever, could happen for Bitcoin. And if we go back and look at the prior, I mean, these were just beautiful, massive, amazing formations that did that very same thing of needing the reaction phase, especially 2019, come back, form another pattern with the bat that set you off. A lot of time at work here, a lot of mandatory minimums that have to get tested. And this is my third final point on Bitcoin, and it'll be the segue for Ethereum. The other piece of all of this that's so critical, everyone needs to understand that the distance from the peak, that peak on Coinbase feed was it 69,000 exactly on Coinbase? All right, down to 32,933. Pretty much about 36,000 points. Well, it's important and it matters. This has to be a minimum. You have to have this distance as a part of the pattern to be the A to B leg. You have a retracement, and now you have to have an equivalent 36,000 point move to complete your ABCD. All M and W formations have to have that minimum 1-to-1 AB equals CD component to truly have the MW harmonic formation. So even that gets you to 12,000. And I would wait for that. I mean, I would wait for that minimum ABCD with the 886, but it helps to build the zone. The zone looks like this. So if you know that the ABCD is at 12,000, 886, right there, 11.5. It's 11.5. Let me bring that up. It's 11,500. And those exact numbers are critical. I used to measure these by hand with a spreadsheet. It's amazing. There was no M&W tool. This M&W tool that TradingView put out was phenomenal, amazing when I first saw it. The other part of the bat formation, folks, that a lot of people don't talk about too much, simple fact that your BC move, okay, this BC extension right there, is at a 2618. To be exact, this is a 267. 2618 puts you at around 12,000. So you see the levels come together? 11.5, 12,000, 12,005. That gives you your ballpark. That gives you your mandatory structural harmonic minimums. That's what I want to see on this move. I wish, and I still do wish, that it happens this week. Your 20,000. I think the healthiest thing would be for this to get a flush down to those levels, 11,000, 12,000, and then park your butt on that support and go sideways. Give us some really nice confirmation down there. And then you could get a steady reaction later in the year. You really want to see that thing wash out. This is, Ethereum is actually leading the way on all of this, showing us what can happen in that scenario. One moment. Okay, let me finish up on it. I'll take a couple questions in a minute. But I think these two, you have to break these down in this regard. Ethereum, same deal. Ethereum, your weekly chart, what happened? The funny thing I wanted to mention was we got to 880 on Saturday. Actually, almost hit the exact 886 on the low. So, I did want to just make a joke, a comment that I've seen that happen where the actual ratio number, like $88.60 or $886, when it lines up with the ratio, I mean, coincidentally, 61.8, stuff like that, 161.8. I don't know why. I don't want to make that a thing, but when it's there, it does seem to have something. But I want to go off the metrics, and so Ethereum, we know 680. 680. I've said 680 a lot. It's that 886. It's like there. I should get the magnet on. This B point, little trickier. This is closer. Let me do the magnet so we can get the exact. Your exact low, 20. There you go. The 2020 low lines up. The exact high. We put the magnet on it. So the B point, 56.4%. So close to a Gartley. That is so close within our tolerance, but it doesn't work. So we defer to the bat. Now, what tells us this going on 886? Did we reach the ABCD minimum? Because that is important, and actually what happened on Saturday was that the ABCD yielded a reaction like this. There's A to B, up to C, and then we come down to that point right there. Almost perfect. Almost perfect here. The high on Ethereum was 48.70. Again, depending on your exchange, some were different. B point low, what was that? 21.75. About 2,300. 2,300 points off the top there. Again, puts you that your ABCD configuration is about 1250. It's more like this. A little bit higher. Let me take the magnet off. What that means, this distance from the peak, go back to November 21st. Sorry, November 8th. The week of November 8th, off of this low to the B point. Yeah, maybe that's like 2,600. And then project that from C. which is right about there. Gets you to roughly 1100 ballpark, 1050 area. So we do have a completed ABCD on Ethereum off the top, which is a great starting point. Just a starting point. Now, what's going on here? Weekly time frame is much the same deal as Bitcoin, if not worse. RSI deeply oversold now, even deeper than Bitcoin. And again, what's going to happen here? Are we going to get a W formation, or is this going to come out of the zone? You don't know yet. But based on stuff like Harmonic Strength Index, there, which is deeply and continuing to expand, and even our hypersensitive, fastest indicator that I consider amplified, just starting to try to give us a little bit of an inflection. And that needs another week before that can even start to turn up. More time, more time, more time. That's the easiest way to think about it, and kind of trust that, where until that comes out on the weekly, anything you see is going to be a reaction. Anything that pops up, like here's 5 minute right now. Okay, 5 minute, another bat pattern. We've had a series of these, and maybe you could day trade some Ethereum now that this is trying to settle out, but I think we will roll over again. I mean, the big knife has dropped. Really wish that would have hit 680. I wish that we would have got down a little bit lower instead of 880, 680. Then I would say, okay, now we start to build again. But not yet. We don't have it, and we don't have it on the weekly. Daily time frame. Let's go to like Binance feed. There is a question. How much do I trust one chart versus another, like BTC futures versus Bitstamp? I hear you, Shem. Shem is asking, about the different data feeds, which is a problem. We've always talked about that. There are slightly different prices and volumes. You typically want to go through several. I mean, I've always said go through multiple data feeds just to check the differences. I mean, here's Bybit, and we do have a crab pattern, standard crab, that's generated on Bybit and a couple other ones. Not to mention, much like Bitcoin, okay, you have confirmation that came in 3 days ago on that one. It's slightly different. A couple of the other ones were Sunday. Let me go here. There you go. Sunday, Saturday, Sunday, Saturday, Friday. Friday triggered. Saturday was the check back. But look on the daily time frame, most of them look like this. Amplified has yet to come out. Here's standard RSI on the daily trying to come out. Let's see. Let me try another one. Coinbase. I think Coinbase is probably the most reliable on sheer volume, terms of volume. But even your RSI on the daily is not out. Needs to pop. That needs to come out to register something that could give you a reaction here. But a lot of work that needs to be done. Also, look at the trend line into the zone. We need to clear these out. So, looks like that. I wouldn't be surprised to see if we do make some kind of temporary low. I mean, go back to your last, as I was saying with Bitcoin, go to the 21st. Where's that? There's 21. No. Yeah, there's a not as good. Not as good on Ethereum as Bitcoin. Bitcoin seems to have the better cycle approach, but there's a 21st, which was a peak. The consideration with looking at that is whatever the direction is, okay? You're looking for some kind of inflection for the next leg, whatever that next leg is. Lower in terms of this 21st here, There's the March 21. Where's March 21? It's like right there. Some kind of movement, but not against the downtrend. And I wouldn't be surprised to see this do this against this downtrend. Maybe we can get a pop here and then come back down later in the summer, trying to work its way down to that 680 level. Because if you go back to, say, weekly, look at those past weekly examples. Where is it? There you go. There was two of them here. Where's my data feed? Ethereum had the big one. All right, let's go with Gemini on the weekly. Maybe it was daily too for Ethereum. You see the same thing. Big pattern. 886 is hit. All the ratios, ABCDs do align. And you go to 2018. There's your pattern completion. You can't see it. There's the sun icon right on top of the bar. But then we come in about 5-6 weeks later, 5 weeks later, to finally register HSI. And then another 4 or 5 weeks sideways before anything really developed. That's probably what we're looking at now. And I think there's going to be plenty of time. Ideally, where you want to see major accelerations are after downtrend's been violated, or whatever that major trend is, and then you get HSI. You get some kind of signaling to the right of that downtrend. As I said, safe space. The safe space for longs is to the right of that downtrend, and then if you just bring in the indicators, the development is so much better. I mean, it's and with something like amplified, look, we really expect that trend reversal behavior to happen after you get above the 50 line. You can use that approach for standard RSI as well. Amplified, it works better. You're going to see it faster. But you still have to hit your measurement. You have to hit your measured moves. You have to hit your levels. You have to trigger in the right space. And then you need to see the development phase. So again, we haven't finished the down phase. I'd like to see what happens going into the next 24, 48 hours to get down there. But, so far so good. Almost close. And 680 is a really critical marker within this whole downtrend, not to mention, as I said before, the fact that we had an ABCD. If you can just simply draw this ABCD like this down to basically your 2-0, that's what you're looking at. That's why having the ABCD with the ratio alignment's so critical. All right, I'll take a look at a few, and let's look at. I'll take look at a couple of your coins. You guys, a few of you said Solana. I don't know. I think at this point we need to really let Bitcoin, Ethereum wash out. Some of the other ones, some of the other projects, if you believe in them. I don't know what I believe in with crypto anymore, but I don't maybe not have so much problem with the crypto folks. I have a problem with the brokerages. Seems to me that these guys raised a ton of cash and then used that cash to basically raise 5 times the cash, and they all bought Bitcoin and Ethereum. And that's a problem for leverage. That's a classic market event of being over leveraged, having the margin call, and then having the forced liquidations to capitulate. That's a real common market trading event. So here's Solana daily. Yeah, no pattern in Solana. That's not one we've really been favoring, but Okay, all-time 886 is pretty clear. Bring it down. Where's 886? Right there. It hit. Okay. $30. You're registering HSI now. So what do the indicators look like? HSI is trying to come out. Amplified's trying to come out. This would be the week. But I would have to see that by Sunday. You're talking 6 days. I mean, 6 days until that officially registers. It's flashing now, but it doesn't go official until the close. That is the thing. The other part of this problem is you're not in your safe space. You need to be to the right of that downtrend, and you're not. So anything, I think I just want to be clear and say I'm not trying to dissuade anybody from anything. The point is take a reactive trading standpoint to anything you're going to buy. I still say the numbers are lower, but maybe you could get something like this. All right, this is one of the few projects that I think I have an affinity for. The bat token, and we have some patterns here. Look at deep crab on the daily, but this did nothing. It was a total dud. Okay, went sideways, and then it triggered HSI. What can we expect? I mean, that was 26. It went to 36. At that point, you're just penny stock speculating. That's the other thing you have to realize. Like, this is, if you're going to go in on something that's 20 cents, 15 cents, whatever, you're speculating in penny stocks. So pure speculation. But this is a little bit better where, all right, you have the ingredients for maybe a type 1 reaction up to target 1, but that's it. There's not much there. And I think with Bitcoin and Ethereum still providing pressure, it's going to be difficult to get anything other than short-term blast, rollover, come back, go sideways. Quick question. In my volume 2, what's going on, Deeran? He's saying you mark the low of the candle for the retest when it comes out of the oversold. Oh, I see what you're saying. So yes, in my volume 2 book, which everyone can get on the website, I do mark the bar, like we mark HSI. We mark HSI, and I think why I probably don't show that too much is because I've used the HSI formula as the true marker. It's similar, and there are aspects of the RSI formula in HSI, but if you were to do that, what we're saying is because RSI and the indicator, they're not official until they come out of the zone. But whatever the price bar is that comes out of the zone, you mark for the bullish, you mark the low end. That should begin to provide some kind of support there. And then assess it. You don't be surprised if you come back and retest. For example, for Solana, it popped out of the zone there on, was that 5 days ago? But that has to be support that it needs to hold. That's why the price bar is so important. I consider these, if it's a pattern, as most of you know, the single bar that finally tests the bottom of the range is called terminal bar. Terminal as an end of the pattern. Then, if you're looking at something like RSI or HSI, well, the bar that comes out is critical. I mean, you want to look at that exact low. Right there, for Solana, the low of that bar trigger, for BAT, basic attention token, 26, 27 cents is a critical level. And then we do have a hop at 23. But all of that coming together says, okay, you want to be looking in this area. So I'm still not there yet, but at least you have some confirmation. It's not the prettiest of patterns, but at least you're seeing some development. until you get out of that zone, okay, and until you see, really with RSI and amplified, they need to get above their 50 level. That is something else. Not only, I think for a real move, you can get reactions that pop out of extremes, but you need to see things like this, like amplified, go from the 50 level up to the oversold above 70. Thanks, Snipes. Yep, Snipes is saying the sun icon, which is here, over here, that's the pattern completion. Now, where the confirmation comes in helps to tell us how quickly we can expect a reaction, or conversely, do we even take the trade? If we don't have confirmation, we're not taking a trade. If I don't have a check back, which is the only thing I want to see for BAT, I would love to see BAT come down one more time, retest this trigger, and then go. All right, that's plenty of time in all of these, but that one's a little further along, where if you were looking for a reaction trade, not bad. That's not a bad spot to be looking at. But you basically take a look at stuff like crypto.com. Okay, similar pattern, deep crab. This one, did we hit the hop? No, the hop's at 9.1 cents. So far, you traded as low as 9.7, 9.8, but blow it up. Here's the zone. And this is something important for all patterns, all markets. That is, I don't think it needs to be really highlighted more so, because a lot of people know, okay, great pattern. Here's my zone. I'm going to get in the trade. And those first few days, you can feel like a champ. Yeah, caught it right at the low. 16, 17, even 18 cents. And then you get a reaction. And then it doesn't follow through, goes sideways. It's called a dud. A dud. And it starts to kind of arc back over and go lower into the zone. Talked about that before. How do we avoid those? Well, no confirmation, no trade. And here's the pattern completion. Look at no HSI. Look at amplified here. Even your amplified indicator is deeply oversold, doesn't come out for a while. And then when it finally does, here's the thing we want to look for on all of these. When it goes to the 50 level, can it get through the 50? That one didn't. And look how many days it went sideways. This is the same thing on Chili's. I talked about this on Chili's before. That when they do these dud scenarios and they go sideways, I say 30 bars, but I think by 20 bars you know what's happening. There's your 30 bars. 30 bars was last week or more. Still no confirmation. The fact that you got confirmation here, all right, I would maybe start to look at that, but I think there's plenty of time. The problem, again, these that are not out of the zone. This is a complex structure going on the amplified signal, not only on amplified RSI, but here's standard RSI. Everyone see the W there? Really important to understand. This is huge. These kind of characteristics in the oversold, where you get like a W formation and it then finally comes out, that will be, and it is, a complex structure on RSI. But the best that you can hope for over the next few months with this is a reaction, come up to the 50, and then it will have to come back and get retested. Those are the rules. That's from my volume 2 book. Has to go through that. Go through my volume 2 on the website, please. Because you'll learn, it's not difficult. It's not difficult at all, but once you see the difference, then you know, okay, all right, now I understand how to handle RSI. Okay, now I know what this is telling me. It's telling me it's likely going to take more time. Even if we pop off of 11 cents, and I was a big believer in crypto.com, from a trading perspective, I would still expect something like this in the price, where you come up and you still have to come back down. You need to do a major basing formation, which can have its movements. You can do some, you can do a sizable move. This could double from 9 to 18 cents, but then come right back down because you're just starting stabilization phase off of these patterns. Thank you, Snipes. Snipes just posted that. Appreciate that. Those books are all available in the Discord too, for free. Let's do a couple more. Total crypto. I think that's important. Look at total crypto. This is got all the big numbers down about 450 billion. This one did register on the daily. We're seeing this, okay, on Ethereum, Bitcoin registering. Total crypto market cap did give us an arrow, green, beautiful arrow, and it did check back. But tell me about what the indicators are doing. What's amplified this RSI indicator doing? It's still in the oversold. It hasn't popped above 30. It would have to do that. Now, so maybe you're a day away or 2 days away from getting anything. I mean, and just from the indicator perspective, you can get the indicator to move and price action not to move so much. Here's RSI again on the daily. RSI was not able to get above even the 30 level. Important to recognize that. You're going to take more time. More time. So anything that you get off of this low is just going to be reaction until those other indicators become real clear. And not to mention, we're still dealing with massive downtrend. It's the weight of that market is playing against you, and your likelihood for massive drawdown until this is taken out is going to be trouble. It's going to be like a weight, like a chain on any kind of bullish price action. That how do you resolve this? Time. Even in a strong move, I would say, let's say this popped and something happened and you got right back to 1 trillion, you would have to do something like that and then get to the right of that downtrend. This is some Wyckoff stuff too. This is Wyckoff looking basically at jumping across the creek, if you will, breaking the downtrend and then coming back to get clear of that downtrend in what I'm calling the safe space and signal to the right of there. That's months away. That's why I think, just avoiding a lot of the action, if you were trying to long this, and I've been saying this for a while, that all the longs should be reactions, and they still should be until these larger formations can resolve themselves. You could be, the other thing that kind of, it does get underneath my skin, because these guys are talking their books, and they're saying, yeah, you're never going to see, this is exactly what you want to see. You wanted to see this all go on sale and because you're going to buy this stuff, 80% off. Well, what happens if it goes 90% off or goes 95%? That's when the drawdown really can hurt. Where we talked about Chili's. I dumped Chili's at 11.78 cents. It went to 9 cents. And so percentage basis, and I was up front with this. I had 15 grand in there. And that 15 grand, would now be 12 grand. That's not what I want. I don't want to give away $3,000 if I can avoid it. There's Chili's. Now Chili's, like the other one, like Crypto.com, did have a check back. But this is the thing. This will be the thing later in the week. For those that have not made it out of the amplified or oversold zone of RSI or amplified, what you need to see is a clear breakout above the 50 level. What happened a month ago? You had some amplified readings, but it could never get above the 50 and really get going. That's why you saw the dud action. I mean, I spent days just going sideways waiting for this to break out. Thought we'd almost get it on that second move, and it rolled right over. That's where the time limit comes to your favor. And again, 30 bars, folks. It's a really simple rule. It relates to the central limit theorem. It basically is the minimum sample size for any statistical study. You want 30 bars. So we have an expected reaction after a pattern completion. We need to see certain things, or we have to adjust our trade management strategies. That's what happened with Chili's. And I would even say that you could start that 30 bar count again from here if you were looking for something. I'm not looking for anything yet. But if I was looking for something, I would need to see that reaction by mid-July, or the whole thing's probably bust. It'll bust out. Eventual hop level at 5.4. It happens like that. Well, the real trick is to understand that, look, we're lining up our best patterns, our best confirmation strategies, positioning ourselves where we need to be, as long as we have the corresponding action. If we have, say, RSI exemplifying that kind of reversal behavior, look at here. I'm just picking this out of the blue, but look at the deep crab that materialized on the daily on Chili's, up at 31 cents. You had confirmation. Look at the demonstrative amplified RSI reversal and downtrend, and then you broke under the 50 level. You just continued, and you never got above that 50 again. I mean, once you cracked it here, look, you did not return above that 50. What was that? That was 2 months of real bearish action. You get into that zone, that breakdown zone, where until you develop another signal, that downtrend will persist. Same deal with RSI. I mean, RSI, standard indicator on every platform in the world. You can do this manually, but understand the dynamics here. There's a real responsive RSI signal, but the big move did not happen until you got under that 50 level, which you did. Same goes with the current action. I mean, you're not going to get much until you get above 50 on the RSI. There's just a lot of, again, a lot of technical chains holding you down here. Really important. Yeah, the 30 bar rule, thank you, David. The 30 bar rule is in volume 3. I should bring that up. I'll do that in a second. But take a look at that. So with everything going on, I'm glad we got this off. We didn't get cut out. Here's the last one that I'm going to show everyone, that Doge. So I want to look at the session I did on Doge, of why I bailed on Doge, and we'll use it for the same way I did on the upside as I did the downside. And it's a real basic technique, and it all comes back to the simple ABCD pattern. All right, the simple ABCD on any time frame, any market that you're using, is a minimum metric that you need to see materialize before you can really consider a major reversal at hand, or actionable opportunities, probably a better way to describe it. But I think I know, and you can go back to my Twitter account from a year ago. You can look at some of the videos. This was right before Elon got on Saturday Night Live. I was out. I was out of all of the Doge. It was just simply because it did this. 1618. All right, there's the 1618, the big one with an ABCD. All-time ABCD from a fraction of a penny up to your B point there at 44 cents. I mean, amazing. 40 cents there, and then 40 cents from 16 puts you roughly, your ABCD level was at 56 to 58 cents, and there was a couple other things there. Roughly, we were saying about 60 cents. Yeah, it went to 78 or 74. I was out at 62 because of that pattern. I don't know. I know some of you remember this, but this is going to be a basic structure I think everyone should apply to Bitcoin, Ethereum, any coin that you're still interested in. You better have some kind of corrective ABCD on the downside now as a minimum major level, like we saw in Ethereum. On the top side here with Dogecoin, once that completed that ABCD, it couldn't get through. And it still took many sessions, many bars before it was even confirmed. Real simple technique. I learned this technique in the dot-com bust in 2000. A lot of the dot-com high flyers formed these all-time ABCDs, and then from there they went bankrupt. It was insane. So this all-time technique, if you can, trace out, connect your dots with these ABCDs, much the same way to the top, we can do it to the bottom. And that's what I'm looking for. That's what I'm looking for over the next several days and even weeks in the markets that are expressing these kind of formations. With Doge, I mean, we had a couple other things. We had HSI. We had a bearish HSI up there. We had indicator confirmation that once that ABCD sat in and we had a complex formation. I mean, look, you had a complex formation on Doge, okay, that marked that top as a reactive long move, and it still came back. Look, still had the retest. Now, tomorrow, we'll talk about the second half of the RSI BAM, the RSI, the confirmation methodology we use with RSI, or indicator confirmation. But this complex formation is only the first starting point. It's the secondary level, the secondary confirmation, where you really see the whole trend come together. Typically, this can be pretty close. Sometimes, yes, it can be this far apart. But when you have that kind of setup, complex to impulsive, that defines your RSI BAM, it's devastating. It's devastating. But in the meantime, what you'll see, all right, is a reaction off of that move. And what we're looking at now, go back to where we started here with Ethereum or Bitcoin. So we're now on the downside, the downslope here on Ethereum. Probably the one to watch, I think, even more than Bitcoin. Surprisingly, that's something that in the last few days, it's drawn my attention, where that got liquidated more than BTC, but we're getting W formations. They're not there yet. They haven't completely been realized at the moment, and it still might be a few more days, but we know how to handle these. We know that these will be corrective formations that will take their time to come out of the zone. Something like this. This will come up to the 50 or more, and just from a simple indicator perspective, will have to come back down before you could even consider a whole new trend to be established. That's how early we are. So don't be surprised if you see nominal reaction in this zone. That can happen. But there are a whole bunch of elements that would have to occur and time that has to occur before you can even say, all right, we're pretty close to maybe ending this full down cycle. No, you're not even first inning yet. You got close. We would have been close had we hit 680 on the weekend. Over the weekend, I would say, okay, we're in inning one of the stabilization, and it could still go sideways for 6 months, 12 months. But these are the specific signs we're going to look for in the next 2 days. 2 days. So I'll be back tomorrow, 12 noon. Everyone, here's where you need to go. Go to here. Oh, no, go here. Let's do it this way. Go to Harmonic Trader, folks. So a lot of the things I was talking about are all available on the website. Harmonic Trader as a basic member. Sign up on the homepage, harmonictrader.com. Then, and it's an email. And do it before I'm probably going to make the basic like a donation, like a $20 donation thing, just because I'm getting spammed on my other forums. We're okay now. It's fixed now, but I think that's the better way to go. Become a basic member. The other thing is go jump on our Discord. And here's the Discord link right there. Join us on the Discord. We got tons of people in there. Real good group. Really good group. 1,600. All right. Good start. 368 on there now. A lot of guys, ladies and gentlemen in there that will help questions. I appreciate those people immensely. Get the books. Look, there's all the books. Today we talked about stuff that's in volume 3 right there. And then tomorrow I'm going to get into stuff from volume 2. The volume 2 with the RSI BAM is going to help explain the current condition of RSI right now. Here's volume 3. And that's the one you should look at today. And the volume 2 will go there tomorrow. But everybody that's watching this and either recorded or live that you're not set up on TradingView, please send your username to hpc@sr-analyst.com. You get a 14-day trial. Take the 14 days first. And if at the end of that 14 days you want another 14 days, please send your note to support and he'll take care of you. That's critical. That's how you get the tools, the understanding, everything that I'm talking about. It's not like you have to figure it out. There's a lot going on. Absolutely. But we've been able to encompass all of that in the programs and the resources here that give yourself 2 weeks and then come back to me and tell me where you are in 2 weeks. You'll be seeing things much more clearly, maybe saving yourself a few bucks next cycle. But let's talk about more of that tomorrow. Thanks again, everybody. Let's bring those other questions in tomorrow. Snipes, David, thank you guys. Appreciate it as always. Miss Stephanie, thank you. Everybody else, come on back tomorrow, 12 noon, as long as I'm not having issues, but I shouldn't. And we'll talk about the second half of what we need to see and also how are we going to handle the next 6 months of this year with the markets. I've got some real concrete ideas I want to share with everybody, and it all involves harmonic patterns with some basic common sense. So until then, have a great one. Enjoy your holiday. We'll see you tomorrow.